cloud. All right. Do you guys see my screen? What do you guys see? Multifamily realty gains or something? What do you see?
Yeah, I see your building.
You see my building? Okay, the one which I never owned.
Not yet. Not yet.
Not yet. Yeah, you're right. Okay, very welcome. Very welcome to everybody. My name is Prashant Kumar, and I have a guest with me today, Abel. Abel, please help me pronounce your last name, please.
Pacheco.
Pacheco.
Mm-hmm.
Is that correct?
Pacheco.
Abel
Yep.
is a great friend of mine. It's just that I never could pronounce his last name. And he will give me a hard time for that. That's why I asked him to pronounce his name again in here. But welcome, Abel. I really appreciate you taking time. I know you have two small kids, and it means a lot that you are here with us sharing your wisdom.
Yeah,
But
absolutely. I'm sorry. I pushed it till a late night call. I have a 2.5-year-old and a 1-year-old. So it's like
yeah,
it's dinner time, bath time, bedtime. And that's why I kind of asked for Prashant, can you make it a little bit later? So thanks for allowing me to join the evening.
Yeah, for us, no issues. We can do later also. But yeah, that's fine. It just works perfectly fine. 9 to 10 is not so late here in New York. So again, my name is Prashant Kumar, and I'm the owner of Multifamily Realty Gains. That's just my company. Like everybody else, at some point I was wanna be a syndicator, but now I am a syndicator. I've been doing real estate for some time, and let me just talk about my introduction. I have a strong technology background. For last 25 years, I own some assets for myself, and and I did about 1,200 units for myself. It's kind of a shameful introduction. I don't like it, but for the sake of showing off, I'm doing it. I own, I'm into 1,200 units as GP, LP, KP, and everything. We have done smaller syndications so far, but now we are trying to do bigger syndications as a sponsor. Besides multifamily, I have passion to get involved into assisted living business also. We started that last year as a pilot project. This year we are acquiring a few more assisted living facilities. And I plan to continue to expand our business in multifamily and assisted living space in future. I'm very active on social media. I hope you guys see me here and there, but I'm willing to share like everybody else. Just want to be out there and basically make myself feel important. That's all. So yeah, recently I launched my website, My Realty Gains, and I created a 7-day passive investment email course. Anybody who wants to, subscribe to that, feel free to do so. And I'm gonna share that link also with everybody in the chat window, myrealtygains.com/7-day email course. And you want to talk to me, feel free to call me or schedule an appointment. And all this I will put in the chat, My Realty Gains / schedule appointment. These are technology driven things, so a little bit more complicated. I take pride that I was able to create these links. It's not Calendly. It is different than that, but whatever. So my email again is prashant@myrealtygains.com, and my phone number is 631-428-6479. Having said that, I'm going to jump on to the guest that we have today, Abel Pacheco. And let me just open up Abel's document. Well, I know Abel for only, not a long ago. We met, and then Abel asked me to appear on his podcast. He was recording one. I think he started a podcast recently. But Abel is very experienced in his business. He has invested in $93 million commercial real estate in about 800 doors. And out of those 800 doors, he's in about 400 doors. He's a general partner, and he's also in the process of developing 156 unit complex from ground up. His wife Leslie is also a limited partner in 282 doors all by herself. So he has that family all background also. When they talk, they just talk about multifamily. They don't talk about kids. so so that that is but I mean overall he has been in that senior technology sales for a long time. He was a senior technology sales executive with consistent track record of surpassing quarterly and annual sales objective. That's a big thing, consistently surpassing the sales objective. That's a major thing. And I can keep on reading about it, about his career achievements, but maybe that's not the purpose here. Overall, he is extremely talented. He has a 5 talent commercial real estate podcast. He's doing podcast almost every day, and he manages all aspects of acquisition, repositioning, and sales of single family and multifamily properties in Texas and in New Mexico. Right? So his Bachelor of Business Administration from University of Texas, San Antonio, and he's married, of course, his wife Leslie, since 2006. So Abel, thank you so much for coming on to my podcast.
Yeah, absolutely.
I would love to ask you a lot of questions about the current state of financing today. In addition to that, I will be talking about how do you go about finding deals. I know you are extremely active in San Antonio. How do you go about finding deals? How do you go about researching markets? How do you go about raising capitals? And how do you go about financing? I know you are involved in financing aspect also. You work with our friend Anton, who's the broker, finance broker. So I need some good tips from you. I had interviewed Anton about 2-3 months ago, but I want to get like latest and greatest for our audiences. I mean, I could have invited Anton also, but I thought it's better to talk
Sure.
to have a different perspective. So that's why you
Sure.
are here.
Yeah, we'll definitely bring a little bit different perspective for sure. And yeah, I appreciate everything having me on your show, Prashant. It's good to know we have a few like-minded individuals here, some buyers, some multifamily investors. So I can I'll definitely have a different perspective because Anton is CEO and founder of Peak Financing, which I'll present in a minute. But I also represent really myself at 5 Towns Commercial Real Estate. I'm a buyer. I am, somewhat of a, I would say a newer multifamily investor. 2 years into it, I've been investing in real estate for 12 years. So I bought and single family properties for the most part in Texas. We got me and my wife do talk about a lot of real estate and our kids. We did that for 10 years. We got to about the most properties we've had at once were about 10 single family properties. And through the years, we realized multifamily is kind of the way to go. So we went from 8 to 800 doors, as Prashant mentioned. And we are, in any number of multifamily properties, value add, repositioning, ground up. So hopefully I can share with you a few things that may help. And if I can understand a little bit, so Teresa, I know you're blocked out. Curtis, Yomari, Lam, Tony, I can see you, and Paniagua. Is that how you pronounce
Yes.
it? Okay,
Yes.
good. Paniagua. How? I don't know if it's a raise of hands or maybe just an unmute to tell me who's done a multifamily deal as a general partner. I'm just trying to gauge the audience for you guys. One person. Anybody else unmute? So I
Those
would.
yeah,
What
those
was
who
the
don't
question
want.
again?
No, yeah. The question is, who in our group tonight has completed a multifamily, call it larger, 5+, 10, 20, 50, 100 unit multifamily apartment complex as a general partner or principal?
Negative.
I guess
Okay, very good.
I
No,
have one
All
not yet.
right.
5 unit. It's been over 10 years.
Okay.
I think I've fallen behind my plans of getting another property, but that's what I'm working towards now.
Okay,
It's
very
never
good.
too late, right?
Yeah, that's awesome. Thank you. And who in the group is a limited partner or a passive investor in a multifamily deal? So one, two, three, and I am
Yeah,
as well. And you guys, so
right. Yeah.
okay, cool. Thank you very much. This just gives me a little bit of insight of where to steer. So a few bullet points that Prashant had provided in our invite, right? One was how to get your hands on your first deal. What's your process to go get it? How do you raise the capital, and then loan financing? I'll talk about loan financing at the end, and I'll try to make it super brief because I think for the most part, it's like, man, how do I go get one of these deals? How do I raise the money for it? We can get to financing for sure, but first let's find it. So um, I'm speaking from a Texas background, San Antonio. I grew up in Corpus Christi, so I grew up near the beach, and basically now have my adult years next to the Alamo here in San Antonio. And so the properties that we buy, they're garden style, well, for the most part. If you can see my screen, these are all apartment complexes that we are invested in today, either as general partners or limited partners. And they're pretty much garden style, 1, 2, 3 floors at the top, maybe. And they're sprawled out, across Texas. So on a few acres, you can have, 100, 150 units. The one, I guess this one's 268 units. This one's 120 something. This is the same 120. This one's our new development that we're doing in New Mexico. Is our first time outside of Texas. And this one is a repositioning of a downtown office building into luxury apartment complexes, about 65 doors. So, that's kind of what we invest in. For the most part, we're trying to look for properties that are like at least 100 units. Sometimes we go lower. You see the 65 unit repositioning. We have another one that's under 90 doors that we're going to close on at the end of November. But that's kind of the range. And essentially, as a new person trying to go do some deals, the main thing that you're trying to figure out is you're building your team. And your team is absolutely clutch, because without a track record, being a general partner or principal on a deal yourself, you're trying to really leverage someone else's track record. And so let's talk about loan financing. Kind of back up into this, right? How in the world do people buy a $7 or $10 million deal? How does that happen? I've invested in all of these. I've never had, more than, I've never had a $2 million in my bank account at any one given time, cash. Just never happened. So I can't buy this thing on my own. I have to partner with other people, and we team up together, and we all go take down something bigger than what we would have normally been able to do on our own. So what I'm going to do at a high level, I'm going to talk about the different ways people buy apartment complexes, and then keep layering on this information, right? So the first major way that people do this is they use agency debt. So the first part, agency debt, meaning Fannie, Freddie, HUD, all of these are agency backed, non-recourse loans, and we like non-recourse. If I'm doing any one of my single family properties, they were full recourse. So if something bad happened, I am absolutely tied to the $200,000, $300,000 house loan. Whereas if I do a $10 million deal, I can kind of sleep at night knowing that we're in $93 million of it, and it is non-recourse, right? So that's at the highest principle from that. There are some bad boy carve outs, like if you're fraudulent, if you lie, if you misrepresent, it'll go recourse. So you can't just say, oh, it's not recourse. You do have to follow the rules, but as long as you do, you and your partners and everybody is clean, then you guys are non-recourse loan, right? So that's very comfortable getting into it. They're very favorable interest rates. They're not so favorable exit costs. They can be a little higher. They have some yield maintenance, which means I want a long-term loan for as long as possible. I can have the lowest interest rate possible. But if I do with Fannie and Freddie, typically, if I exit early before they want me to, then they're going to charge me more money and I have a prepayment penalty, right? But for the most part, if you have a stabilized property, 90% occupied for 90 days, you're going to get a good loan with agency debt, and it's kind of like the premium, best agency type of debt there is out there today, right? So that's the main one. The
Yeah.
second, oh, go ahead, go ahead.
I'll just jump in for a second here. Guys, pay close attention to what Abel is saying. Those who are new at least, because what he's saying, he's really giving the real nuggets, which are extremely important to understand. Yield maintenance, kind of loans that are out there. I mean, he's like a perfect example right now, who had started a couple of years ago, and who has grown to this level. So just follow what he's. I mean, I'm liking the way, Abel, you are taking your direction. Your direction of your talk. So please continue. And sorry for the disturbance in between.
No, you're good. You're good. So that's one way, right? Now, this agency debt, which a lot of people want when we're buying apartment complexes, unfortunately, they also, for the most part, require some experience. And if you don't have experience, then it's like a chicken and egg situation. I want to buy a deal, but I don't have experience. So how do I do that? And one way people do this is just loans. We're talking this for a second, which is they use local bank financing, which is recourse debt. It is like a home loan, meaning, hey man, if something happens, you're on the hook for that $5 million deal. However, if you built up a good relationship with your local bank, you can get a loan, work with somebody, senior lender there, and get a decent rate because it is recourse. You do, for the most part, have favorable exit costs, which means I can sell early if I reposition the property without heavy prepayment penalties. So that's kind of like the other route. Is a lot of people want agency debt for all the reasons I just said. Unfortunately, some people can't get it. You're trying to do your first one. A lot of people go to local regional banks, which, there's nothing wrong with that, especially if you find a good deal. Like you don't want to go into a deal just because it's non-recourse and say, I hope this works out. You want to do a deal because it will work and feel better about it because it's non-recourse. But if you know it will work and you don't have the experience, and nothing wrong with starting with a local bank and getting the deal done, and they can help you, and you develop a good track record there locally, and keep going, right? The third route is a bridge loan for these multifamily deals. So these bridge loans, let's say you found a distressed property. Distress meaning it's not 90% stabilized. It's below stabilization rate. And so, it has 70% occupancy. So if there's 30% vacancy, it's distressed. I think it's a great deal because I want to get in there and I want to bring people to the apartment complex, lease it up. And that would be my quote unquote reposition that I'm getting into. And I reposition the apartment complex. I've just forced the valuation up. There's a few $1 million extra profit. That's what I'm going for. And then I sell it to somebody else or refinance or whatever I'm doing. That's what the bridge loan does. It helps you get into an apartment complex or multifamily deal that's not stabilized, and usually they're much shorter term. Agency, Fannie Freddie, maybe 7-10 years. Bridge loan, maybe 2 to 3 years, much shorter. They're usually higher rates. You're going to pay more. You're going to pay a premium because it's not stabilized. You are going to have flexibility for repositioning loans. So if I wanted to exit early, I can do that. And that's what you're paying for. You usually have higher loan proceeds. I have to bring more cash to the table, but very favorable exit costs. So those are like the three big ways that most people buy apartment complexes. There's also CMBS loans. There are HUD loans. There are institutional lenders. There's all kinds of things like that. But for the most part, if we're syndicating, I don't have $3 million to put down on the note myself. We're raising capital between more than a few of us because we're creating limited partner passive investors in the deal. That's the way we do it, syndication. So it's usually one of these three routes, and that's kind of how we're getting into these deals, right? So I'm going to talk rough numbers. If it was a $10 million note, they would want roughly about 20% down. So I need to bring $2 million to this loan. And maybe I bought it with, it has a little bit of issues with the roof, the air condition, the AC, and maybe the boilers or the chillers. And, all of this adds up. It's 100 units. I want to do the improvements on every one of the units. I have to improve them 5K a piece, right? So 500K for the renovation, interior, maybe 500 for exterior. Well, I've got to raise $2 million for the note, and then I have to raise another $1 million for the capital improvements. So I'm trying to raise $3 million. So one of the ways that we just talked about, or the high level bullets, how do we get your hands on your first deal? And that is, this process that I'm describing is like exactly how we buy a $10 million note. $10 million deal is I need to find people with deal flow, that they're a broker or somebody knows them, or they figured out a way to off market and reach sellers directly. One or the other, somebody has to present a deal. Somebody has to analyze it and make sure that it works for our intention of buying and then turning it. And then I've got to find some kind of debt, whether it's agency, bank, or bridge. And then I've got to come up with $3 million. And the way we do that through syndication is through limited partner passive investors. The norm, it's kind of like there is a norm, and it's 50K minimum investment, but there is also like not a norm. And whatever you want us to do, if you're running the syndication, you can make it 25K minimum, or you can make it 100K minimum. So it's kind of up to you, but you're trying to pull us together. If 9 of us were here to agree that Prashant found a great deal and he says, hey, let's go do this deal, and we've got a good relationship that's established tonight. We all have a pre-existing relationship. We know each other. And he says, hey, I need $2 million. And between 10 of us, we all brought 200 grand. Then we could go buy this big apartment complex. And that's, at the highest level, that's the loan financing that I think may help here. And I have much more, but let me pause here. Prashant, or anybody else, maybe we can go on a few questions and then I'll go deeper here.
Yes, guys, feel free to ask any questions if you want to in the chat window, or unmute yourself and ask any questions. Remember, these what Abel is talking about. These are very important nuggets. I mean, he has actually set up a deal right on this call. I mean, if we are 10 of us, we bring in $200,000 each, we can easily buy a $10 million property. All we need is $2 to $2.5 million in our bank account in total. And there are $10 million deals out there. It's not that you cannot find those deals. They're out there. It may take 10, 15 days, maybe a month, for 10 of us to spend a couple of hours a day to find a deal. So it is possible. It can be done. The only thing is it's a team effort, right? It's a team sports. That's the most important part. One guy cannot do everything. That's the real part. You have to understand, we don't have to be greedy in this business that I'm going to do this deal myself and I'm going to make all the money myself. It doesn't work that way. Just the sheer amount of work that it has, it needs the team. And which Abel said, you need to have like team who can do the work, different parts. Somebody can bring the deal, somebody can analyze the deal, somebody can talk to the lender, somebody can work on closing, inspection, things like that.
Yep. Yeah.
Very good points.
Very good.
Guys, ask any questions.
And I'll definitely keep going.
Yeah, please.
And if you guys have questions, feel free to stop me. It's totally okay.
I know
So
Curtis is asking, he's very new to CRE. Please explain stabilization a bit. Please.
okay. Stabilization for agencies is basically, I want to have 90% occupancy in the building. So if I have 100 doors, I need 90 of them filled, paying rent there. And I need that for at least a period of 90 days. So 90 for 90. If it's 90% occupied for 90 days, I can qualify for this agency, really good, low finance, non-recourse, fixed rate interest rate, or maybe even a floating rate, but it's just a good way to buy these properties, agency backed debt, right? So that's 90 for 90, or that's a stabilization. So anything under that, there's like, usually we say, oh, this is a value add, I can increase the property. It's at 70%, I want to get it to 90, and I can make the difference, and I can put renters in, and my property is going to do better. It'll generate more NOI, net operating income, and I'm ready. So, but you can't do that on an agency loan. You would need something else, like we talked about, a local bank loan or a bridge loan. So at the high level, that's where it is, right? Now, let me kind of discuss like a loan broker. So Prashant mentioned, so I am, I'm a few things in the CRE world and commercial real estate world. I'm a buyer for the most part. I'm a syndicator, like Prashant mentioned. I want to go do deals. I want to go buy them, run them, operate them, pull investors together, and we want to go buy more of these deals that you see, in the pictures around me. And I'm trying to buy as many as possible. So I'm talking to brokers, I'm talking to owners, I am making calls, and I'm analyzing as many of these properties as possible to make sure that we find a deal that works. You may have to underwrite, Prashant will tell you 20, 30, 40, 50, 100 deals before one actually works, to where I know we can take a passive investor's 100K seed, 50K seed, whatever it is, and try to maybe double it in 6 years, right? Or I'm trying to hit a 15% return or a 16% return, or whatever percentage return we're trying to hit. I'm basically backing up into that math and saying, if I paid $10 million for this building and I borrowed $2 million from all of us here, can I make it 4? And will that deal work at $10 million? If the deal will not work, then I might have to offer 9. And if I can offer 9, if they'll take 9, then we can double our money in 6 years. And that's kind of how we're getting after it. I like, probably like Prashant, we want professional property management, as does the agency loans want us to have professional property management as well. I want professional CPA, like a CFO kind of person on my deal. I want a good asset manager. I want great, individuals helping me perform and have success on the apartment complex, because I'm not going to be, I'm not going to be in the office greeting new renters. I want the best property managers I can find. So we write those things in there, and you have payroll, you have professional property management, you have asset management, you have construction management. If you're doing a lot of turns, you're paying for the GCs, the contractors. And if you can underwrite this property that says, if I buy it for 10 and we put in $1 million extra, it'll be worth 15 in 5 years, then 10 is a great number. 10 works. If it doesn't, then it's like, that's why we would pay 9. We back up into the right number, and that's kind of how we make an offer. So once you've secured that, I think that's kind of like our next bullet that we had on Zoom was, well, how do I get my first deal going? Like, how do I actually do that? If and this isn't deal finding, although that's a topic or a weak topic on its own, but this is, I found a good deal. How the heck do I get it financed, right? And so what we would want to do is we would want to, and this is kind of where I come in for the peak. Part of my other role, this is my W-2. Well, no, I'm not actually a W-2. I am I'm a contractor, and I work my tail off to help others find good financing for their properties, and I do it for my properties also. So I do the same for others that I do for myself, which is, man, I'm trying to find the best debt. I'm trying to find the best, lowest rate, most flexible term that I possibly can as an owner, because the better that I have done on the financing, the more money I'm going to make in the end. There's a big difference between a 4% loan, and right now they're like at 2.7 to 3-ish loan, which makes all the difference in the world from net operating income, which makes all the difference in the world between what I can pay for the deal and still make our return, right? So essentially, the loan brokers are pretty essential, and I'll talk about this, from my 5T CRE hat. I'm the president and principal of 5 Talents Commercial Real Estate. That's my buying, my multifamily investor hat on, but I'm a loan broker for Peak Financing. And I don't know how to share How do I share my screen, Prashant? It's been a while.
Yeah, at the bottom
Do
you
I have
have a green.
access? Okay, cool.
Yeah.
I
At the
think I
bottom you have a
see.
green green button
I
and
think I
just
see
share.
the access now. I'm gonna share this. Okay, one, two. No files. Basic. What do y'all see here?
We see your your
Do you see my
presentation.
peak
Yeah.
financing here?
Yeah. Yeah.
Okay, very good. So what Peak does is we help acquisition, refinance, bridge, JV equity, construction, recapitalization, reposition, mezzanine if you want preferred debt, basically, all the whole round, right? And you can see my face and Anton's. Yes.
Yeah.
Okay, very good. So I'm a senior debt advisor for them. Anton's the CEO and founder. So basically, for Peak, I honestly leverage Anton's experience. And the main thing that I wanted to, talk about, which is what Prashant mentioned, is what we do is work together as a team to have the best expertise possible, whether I'm a buyer or a loan broker. I want a team that's done hundreds of millions, if not billions. And I personally use Peak as a buyer, and I use Peak as an owner and redoing refinance. It just happened to be that I was like, well, I got some extra time. I'd like to go find these deals with you guys too. Help people underwrite debt sizing and help them with their loan brokering part of it. So they've got $5 billion in of debt underwritten, and they've closed thousands of these transactions. Basically, Anton has years and years and years capital, mergers, acquisitions, Fortune 500, uh, you know really M&A, and helping family offices, helping investors like myself, which is kind of why I joined. So that's who Peak Financing is. And we kind of talked about this bank loan, we talked about Freddie, and we talked about Fannie. Those are the agency debt, right? So those three types of loans are probably, like I said, the most common. And what you want a loan broker to do, you want a loan broker like an attorney in court to kind of represent you. There's an old adage that I heard one of my partners say. Well, everyone says the old adage, but if you represent yourself in court, that you have a fool representing you, right? You kind of have the same mindset, or I did, and I still do, in the loan broker side, which is I want somebody that's done billions of dollars of underwriting, billions of dollars of debt sizing, billions of dollars of working with many multiple banks and many different avenues. And that's what the loan broker does. He weeds out all the different banks, whether they're local, regional. There's multiple different agency lenders that will take a Freddie and Fannie and help you find the right debt. And so your loan broker is like one of your power team members, just like a key principal or a general partner or a property manager. It's just somebody to help you work and navigate your way through this world, right? So that is that's key for you guys, and I just kind of want you to make sure that you get that part of it. Now, one of the other topics that we had was what in the world has changed with COVID-19. So this may be a little bit more complex, seeing how I think I only had one person that's actually done the deal. But what's happened is this red text. So I'll kind of break this down from a timeline perspective, and I think that may help a lot of us. The timeline perspective: January, February, deals are flying like crazy. Stuff was still getting sold back and forth, right? Come March, all the debt froze, all the buying and selling froze. We had a 400 unit deal under contract and a 200 something unit deal under contract. Both of those deals we ended up walking away from because we didn't know at the beginning of March what the heck was going to happen. So we were not unlike everyone else in the world. A whole bunch of deals fell through, a whole bunch of lending stopped. And then come June, things started opening up again. So Fannie and Freddie, the agency debts, which a lot of people use, basically said, hey, we'll lend you money, but we're going to hold way more in reserves. And the best way to think about this is, you guys have a single family house today, and your mortgage, whatever that mortgage amount is, say it's, $1,500 or $2,000 a month that you pay in your mortgage. Well, if we were buying that new house, Fannie and Freddie basically said, hey, your mortgage note is $2,000. I want you to have $2,000 times 12 months, which is 24 months in reserves. And I want you to put 24 grand in escrow in addition to your down payment to move into that house. And after you're there for 12 months, maybe 18, just kind of depending on your deal, we'll give you that money back. But I need your down payment, your closing cost, and an extra 24 grand in escrow. So everyone was like, what? All the buyers, people trying to get new deals. It kind of froze a little bit because if you raise, and let's say that impacted your deal 10% of the closing cost, which is an extra $1 million. We already had, we had a hard time, or I don't say hard time, but we raised 2 million, then another million for capital improvements. Well, this group now went from 200K to getting into 2 million. Now we had to bring 250K each. And now we had to get $3 million. So it made it a little harder. And then we were trying to back up into these percentages of returns. So it made it just even a little extra tougher to actually go do that deal. And that's what happened. Those bridge loans that I talked about, if your property was not 90 for 90, if the property was like $3 or $4 million, the bridge lenders kind of backed out also. There are still bridge lenders today that will lend on the 70%, 80% occupied. It's not 90 for 90, but there's less of them in the market. And you have to have good team, really strong track record, really strong experience to kind of get it. Also, in addition to this current state of lending, is the 10-year treasury is at an all-time low. It is like, I don't know, 70 basis points or something ridiculous. It's under 1%. Interest rates are not 100% tied to the treasury, but there's some correlation. When the 10-year treasury is low, then so are interest rates, and they tend to follow that. So if it's an all-time 10-year treasury low, it's an all-time, interest rate, low. Their interest rates are low. Also, the lenders. So the cost of debt went down. So the advantage was, oh, now debt's cheap, money's cheaper. I can borrow more and pay less. I make more money, but I have to pay these reserves. So it was like when this over here, like a pull happened, and then a push happened on this side, a tug and a pull. And it's an advantage and disadvantage. We have to raise more capital, but the debt's cheaper. It's like, okay, cool. So it kind of ended up, going right in between the two, disadvantage, advantage, kind of evened it out. And we're still trying to do deals is essentially the mindset of it.
Is this PITI period still 9 months, or it has gone down to 6 now?
Let me show you the next slide, which may help a little bit more. Here's a little bit more detail. And when I have this here, realize there's tier 1, tier 2, tier 3 loans, right? On this agency debt. There's this Fannie. I have Freddie also. What all these things, and this is what I'm learning the most as a loan broker, going from a buyer hat to a loan broker hat, which is talking to more of the banks. Everything is kind of dependent on who you are, where you are, what kind of deal you have, and your experience, track record, liquidity, net worth. Is it lower? It can be for certain teams. If your team has an experienced operator, an experienced general partner, an experienced key principal, experienced net worth and liquidity on your deals, you may be able to get much stronger, lower interest rate, longer term, more years of interest only, which means I'm only paying the interest only, not on the note, which means I cash flow more for the investment, and I will get a better rate, right? A better deal. I can pay a little bit more than somebody else making a lower offer, and I could still make a higher return for my investors. So these things are kind of subject. So that's why you see this in yellow, case by case basis, because you'll see people advertise, oh, you can get a 2.2 interest rate, a 2.3 interest rate. I'm like, yeah, if it's HUD, 35 years with heavy prepayment penalty, I can't pay investors the way I want to because of the exits, and there's going to be these other stipulations. But so everything's kind of a case by case basis. Here's Freddie. at the high level, just kind of remember that underwriting is getting very tight right now. So you have to have a more conservative deal. Your debt service coverage ratio has to be a stronger number. The minimum old minimum 1.25 on the same $2,000 mortgage example, right? If I multiply that $2,000 mortgage and I was trying to get to a 1.225 coverage ratio, then I would take 2,000, multiply it by 1.25, and that is $2,500 for the single family example. And they would want enough income and your W-2 to cover 2,500, even though your mortgage is only two. That's a 1.25 debt service coverage ratio on, potentially on a single individual. But on their building, on your $10 million building, your debt service coverage ratio has to, the property has to generate enough net operating income. That is your, all of your operating income minus your expenses, then your NOI, and that number has to be 1.25 higher than your mortgage note every month. And you can see here, even Freddie, do they 1.25 is the minimum? Can you bring them 1.3? Can you bring them 1.4? Can you bring them higher? The higher that is, the more likely they're going to say yes to you and give you the loan. The more money you have in operating reserves and capital reserves, the more money your team has in the general partnership team, not necessarily invested in the deal, but in your personal bank accounts, your net worth, your liquidity, the more doors you have under management today, the better this loan is going to be. And that's kind of what we're all looking for basically, essentially at this point is we're trying to figure out the best way possible to go get, the best deal on the note. So
Abel, can you take a minute to maybe at a high level tell everybody the difference between Freddie and Fannie? I mean, I know a lot of people probably do not know the difference. If you have some information on that.
I do. And which screen do you see? Do you see
I see. I see multifamily ownership current state in multifamily lending.
Okay, got it. Okay, let's see here. This one is pretty simple. We're talking about Fannie and Freddie, just the super high level, right?
Yeah, very high level.
Okay, so Freddie, typically you have the ability to come in with a little less experience, and they will help me get a loan. If I have a lot of experience, I'm probably going to, try to use a Fannie Mae agency debt. The Freddie and Fannie, let's say, at the highest level, well, let's just go through it, right? So Freddie, 5 to 12 years, up to 30 years available. The difference on Freddie, shorter term, you see 5 to 10, right? There are some hybrid options available, but hybrid, I could get a floater loan where my interest rate fluctuates. I can get multiple different leverage. At a bank, I'm getting 75%, but in Freddie, I may be getting up to 80. That's similar with Fannie. 30 years amortization. In single family, one of the big differences, if I have a 30-year amortization, I've got a 30-year note. In commercial, those two things don't equate. So I can have a 10-year note or a 5 to 12-year loan, but I still have a 30-year amortization. I can get a longer interest only period, maybe up to 5 years, interest only, not paying principal down, and it would be shorter on on the Freddie side. Now these are adjustable. These all just kind of saying some high level ones, because if I have more experience, again, my team, I'm local, I've done this countless of times. I may get better terms than somebody else, right? But I'm looking for the either of these two, whichever one works best for my specific deal. And whether I have a property that is 90% occupied or higher, whether it's one or the other, I'm looking for the best terms on either one. And your loan broker is going to basically help you determine for your specific example in your market, in your deal, which one is going to be the best one for you. So that's kind of what I'm looking for when I have somebody representing you. you want somebody that's done billions of dollars of debt sizing, which is, why me and my team, I still leverage all of my teammates to kind of say, hey, this is the deal, this is the opportunity, how do we do that? And we're
So
gonna
does
take you through which one's best for you.
so does it mean that Fanny probably needs more experienced players?
Yeah,
The ways.
you can get into Freddie with less experience, and Fannie, for the most part, you need more. You need
So why
somebody
do?
with a Fannie loan experience kind of already. So
Got it.
this actually may help with building your team a little bit, right? Which is another point.
Yeah. Yeah.
Because how in the world do I get Fannie debt, which may work better depending on the deal and the size and the the occupancy and how it's going. How do I get into Fannie if I don't have Fannie experience?
Yeah.
um,
So there are a couple of questions here. I would start from so Lam is asking, why do some lenders use LIBOR plus points instead of just interest rate? I mean, what is the reason we do that?
so
Um,
there are notes that are called or sorry, debt, debt options that are called floating rates. So actually, this is a good, because what's happened in today's world, uh, last year I may have had a 4% interest rate, 4 to 5, and I called that good. And I wanted that a fixed rate as long as possible. I could have that fixed rate term and know that, what happened in 2008 when those interest rates started spiking up, I know that wouldn't happen to me. My interest rate would stay fixed. Okay. The problem is with those rates that were done last year, if I bought last year at 4 to 5% interest rate, but now these loans are 2.7 or 3, I want to refinance into the lower debt option. But if I did a Fannie or an agency debt that had high prepayment penalties or high yield maintenance, which means they penalize me if I sell it early, if I refinance it early, I pay a huge penalty, which may negate all the profit that I've made over the last couple of years. Right. So why would I do that? I'm not going to. So the LIBOR part of it usually goes to adjustable or floating rate interest rate terms, meaning they follow LIBOR. LIBOR is the London Interbank Offered Rate. Go Google it. You'll find a better description of LIBOR. But that's what the commercial loans use to adjust this daily rate, and it literally adjusts up and down. And if you have a floating rate loan, your interest rate may change on a month to month basis. 1 month is higher, 1 month is lower, 1 month is higher, 1 month is lower. And what you don't want is higher, 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 higher. You continue to increase. So why would I do that? Why would I do that kind of deal? You typically don't, unless what is happening lately, the investors are getting savvier, trying to figure out the best loan options. So we're buying rate caps. We're buying uh, like a floater Freddie loan, a floater interest rate that can adjust down if we believe the interest rates will continue to drop, which, as crazy as it sounds, very well may. I don't have a crystal ball, but look at the numbers now and look at where it's going. So if they continue to drop and I'm in a floating rate, well, that's great. If they drop, if they rise, then I can buy or pay for a rate cap, a cap rate lock. I pay, 20, 30, 50 grand, whatever the number is on your deal or your size or your property. And I can and basically lock the rate on which it goes up. So I know it's never going to go fluctuate crazy up, just a little bit up. But LIBOR is usually what they follow to basically adjust your loan up or down. And so
So
hopefully
Abel,
that helps.
I have another question on this. Basically, if somebody has a fixed rate mortgage on a
Mhm.
Freddie SBL loan, is it possible for the owner operator to go back to the same lender and ask them to ask for refinance? I mean, do they do the adjustment? I mean, if there are prepayment penalties, do they consider that this operator is already in this loan and then he's not going out?
Are
Can they
what
adjust?
we're talking about, so I think I may have missed it. I'm looking for the question on the chat though. It's,
No, no, the question I'm asking is not in the chat. I mean,
oh,
there is
okay, okay,
just
okay.
mind, basically if we have a scenario where, somebody is in a Freddie SBL kind of a loan,
Mm-hmm,
and
mm-hmm.
the loan, rate is pretty high, let's say 5, 6, whatever, with some prepayment penalties, 2 years, 3 years, whatever.
Yeah,
And
yeah.
now the rates have gone down so much. Would the current lender adjust the rate, or they, what are the
They,
odds of that?
they won't let you do it just because, because hey, that's the way it goes. You would have to look at your old loan terms and see what you signed. But if you had yield maintenance on there, you're going to have to pay that prepayment penalty. There is a supplemental loan that you can get, which has some different terms, but you're not technically refinancing that debt. You're getting a supplemental loan on top of what you have. But that is essentially why, if you're doing Fannie or Freddie, you have to be really careful with your yield maintenance, your prepayment penalties, your exit strategy, how you're buying the deal. Because, man, if I buy a deal that I know I'm going to want to get out of in 2 years, then I'm going to be very careful with that loan that I signed, because, the prepayment penalties are pretty stiff. The shorter, like if you had a 10-year loan, 7-year, 10, the closer towards the end, the prepayment penalty or the yield maintenance goes down. And sometimes you buy a step down prepayment, which would be like 5, 5, 4, 4, 3, 3, 2, 2, 1, and that basically accounts for the percentage that you'll pay back. But if you don't buy a rate lock, and if you do, and if you do have heavy yield prepayment penalty, yield maintenance or prepayment penalty, then that sometimes it could be like 15, 10, 15, 20% of the loan, which, may literally be, $2 million, $3 million. And you're like, that was my profit. Well, that won't work at all for you. So
I
you're
mean,
just going to basically write out the deal.
my real question is, do lenders, I mean, may try to save the deal if there is problem in the deal? Do they negotiate and try to help the operator out, or they are still sticking their guns out, asking the lender to pay irrespective of what's going on in the deal and things like that? I mean, what are the thoughts in general? I mean, I know cut and dry, they will not talk to you, but does it ever happen that, the deal is in trouble, somebody wants to get out, lenders tries to help, those kind of things? I wanted to take your perspective on that.
I would say for the most part, there's probably better people to answer the question than me.
Okay.
However, what I do know is that, like, I mean, the forbearance options that they provided earlier in this year, they did forbearance, which means, hey, I can't make this note payment if I was in a bad situation. Unfortunately, if you took the forbearance, it's going to be on your agency debt track record, which probably will hurt your buying options in the future. And then you have all kinds of rules that you had to follow through the CARES Act program. Like, oh, you took the forbearance. Okay, you can't evict anybody, and you can't, for non-payment, you can't, there was extra stipulations on those. So it was like, that was a bit of a pain. But
Okay.
there's a lot of data on this. But hey, before we go, because I know we're getting close to time, because we have a few people, or more than a few, that have never done the first deal, let me give you a few leaving points, a few individual bullet points, right? This may help you to get, focused on, how do I get my first one? The first thing that I would recommend doing as a buyer is you want to establish your goals, write them down. If you're married, you have kids, if you have a significant other, talk with them, do that knee to knee, eye to eye, hand to hand conversation. You want to have alignment of goals with your family or people around you, because you want to be like focused on, how do I get my first deal? So make sure they're in alignment, make sure you're working forward. The second thing that I would do is, no matter what stage you're at, is you want to seek education and seek knowledge. So write that, number 2, seek more education. Things like this, great. Podcast, great. Pay for coaching, pay for seminar, pay for mentorship, great. Just do it, right? And seek as much education and knowledge as you can. And the third thing that I would recommend is take action, like invest yourself. And I may mean literally money, invest into a deal, Be a passive investor. I also mean invest your time, invest your resources, take action, whatever the step is, whether your first action is, I'm going to go listen to a podcast and take out my pen and take notes, or if it's going to be, you know, I've listened to 1,000 podcasts already, and I've interviewed 1,000 general partners, and I've never invested. So that may be your next step. So those are the three things that I would really say: is establish your goals, seek education, knowledge, invest yourself, and start taking action. So those are what I would leave you with. I'm going to give you a few things for your loan, since we're talking about loans, right? The one thing that you want to do is you want to find a loan broker. No matter, you know, there's a lot of great loan brokers. They'll help you with Fannie, Freddie, agency, whatever. Some are owners, some are not. You know, just, you know, interview some people and find out who people you like. But really, like, I want to find somebody that aligns with my goals and my vision and my mission, and they want to help me accomplish my goals as an owner. And if I believe that they're going to help me do that, that's the person I want fighting on my behalf to get the best loan for me. So, you know, interview the loan brokers. Hey, what are your goals? What are your mission? What are your vision? How do you help your, you know, your customers? Because really, there's a lot of things that happen once the deal goes through. Like, what you get it under LOI, and you're like, oh, this is great. But really, you want a good loan broker to help you identify the most suitable lenders, create some competition amongst multiple different lenders for your business. Because if you go to the lender yourself, you're just one person. But if a loan broker goes to them, they're like, I know he's literally shopping around among 8 to 10 people or lenders, and they're going to get the best one. They're going to help you review the loan application. They're going to help you do lender due diligence. They're going to help you underwrite the deal. I do debt sizing. I help you normalize the process, normalize the numbers, make sure that you see it the same way the banks see it. And then we'll review the loan commitment. We'll talk about the rate locks. We will ensure a smooth closing. We're going to basically help you sort out any of those issues from there to close. And that's what you're looking for. When you finally find your deal, you want to go to somebody that you know that will help you close. So, you know, that's what I would tell you. The point on the lender side of it is, like, interview them, find somebody that aligns with your goals and your mission vision, and they can help you on that track record, right? And the last thing is, man, anything that I've just said tonight, we didn't even talk about, time went by so quickly. We didn't even talk about, like, the minimum requirements to get the loan. And I might as well say it now. If it's a $10 million loan, you have to have $10 million of net worth on the general partner team. You have to have 10% of liquidity. So $1 million cash, in cash, or securities that you can sell quickly and liquidate them quickly. I need net worth equal to loan size value. I need 10% down on the loan, and I need somebody right now local to the property. And I also want somebody with experience, somebody that's done the deal before, multiple deals, just like the one that you're doing. And I need to have the loan proceeds capital, the 20% down, and maybe your CapEx. So if you can find a good deal, but you have none of the other stuff, the beauty of multifamily investing, like Prashant mentioned earlier, you are partnering with other people that have those things. The better, stronger team you can put together, the easier it will be to go get your loan and get your deal. And so, you know, this is the chicken and the egg part. It's like, it's so hard to say, well, I don't have $1 million. I don't have $10 million in net worth. I don't have any experience. All these things are against you. But, you know, it's like, you know, it's like sports, right? Everybody else is on the field and everybody else is playing the game. And you are on the sidelines and you're just watching them have fun and score touchdowns or hoops or what, you know, whatever. And you're like, I want to get in the game so badly. And everybody, you know, but really it's like the majority of the world, if you think about how many people are commercial real estate owners, the majority of people are not in the game and they're not playing. They all want to look inside, and they all, you know, they look inside and they want to play, but they're not. So how do you get on the field? It's okay to give away the majority stake of your deal on your first deal. It's probably okay to do on the first and second one. You want to just get in, get your card punched. Who cares what percentage of that pie is? If I can get in, now I'm on the field. Now I'm in the game. Now I have experience. Now I have some track record. Now other people that have the net worth may want to work with me. Now other people that have capital that want to invest, they want to get in the game too, and they want to play just like we do. And that's the beauty of multifamily is I can leverage a team to fulfill any deficiency I have. I can go partner with an expert. And we were on a concept meeting today, and I had property management expertise. I had a HUD developer expertise. I had some expertise in the loan broker side of it. I had expertise, many multiple, and I'm not saying me, I'm saying my team had expertise, and everything worked out really well. They loved our team. They wanted to give us more money at a lower interest rate. You could just hear the conversation go extremely well. And I got off the phone and saying, man, we did amazing. And I barely even said anything on this call. And I was like, well, how did that go so well? Our team had so much expertise, just so much value. I know that deal's going to go well because we brought everything that the bank wanted to see. And they're like, yeah, we would love to give you the loan for this deal. So anyways, it's like that's what you want to do. So those are some nuggets to leave you guys with.
No, that's awesome. I mean, Abel, the nuggets that you have shared, they are, I mean, knowledge is one thing, but these are encouraging piece, encouragement to those who have not taken the action. The third thing that he said, you can listen, you can read about it, you can take all the education, but if you are sitting on the sideline for the whole of your life, what's the use of all that knowledge. So you have to take the action irrespective of the amount of pie that you may have to give up to get into the game. One deal, two deal, build your team and get in the game. That is the most important step that you have.
Yeah, you're going to build what happens over time, like Prashant's saying. You're going to build your inner circle, and those inner circle will definitely, like, I leverage my local Texas inner circle, and we go take on some big deals. I'm like, man, this is amazing. And I didn't have any of this 2.5 years ago. Like I didn't have commercial ownership a couple of years ago.
Yeah, there was one question which John had asked was where do you get your off-market deals from? I had missed that one. If you want to just take that very quickly, and then maybe after that we can wrap it up. In the meantime, if everybody wants to share their contact information in the chat window so that everybody can copy it, enable, maybe you can also do that. Somebody's asking for
I'll do that right now. Sorry.
Let's see that everybody has contact information. But the question from John was, where do you get your off-market deals? I mean, from CoStar, from property management companies, or where do you get all that information from?
For the most part, here's how I found deals. I'll put my contact information there. I put my website. I wrote an ebook. If you guys want to check it out, download it. Basically, how I invested in my $93 million myself, and our podcast to follow. It's 5 Talents Podcast. I would love you guys to join. Check it out. There's probably 30 episodes live. I have recorded Mr. Prashant. I'm excited about getting your episode. It's really inspiring, really encouraging as well, and I can't wait to have it out there. But I'm, like you said, I'm pushing them out Monday through Friday right now, daily. But the way we found deals is through the team. So, I know that it's hard to find an opportunity right now. It's like, it was super competitive last year. It's even more competitive this year. People pulled off the market. People, stopped it right now a little bit. People are starting to put the deals back on, but essentially all the deals that I'm in today, except for the new build, has been on market. They are brokers that have a deal, and the quote unquote off market may just be like pre-listing, pre-advertising, before they send out a blast, right, to Facebook or internet or in their world and their website. And so that's about as close to off market as I've come to, is those off market through brokers. The brokers send it to somebody they know that can close, and we'll send it to them before they send it out there. Now, I didn't have track record to get any of those brokers to send me a deal. What I did was I partnered with a team member, saying literally what I'm telling you guys now is if you find the will, just get it on. You're going to talk, network, meet. You're going to you're going to write down your goals. You're going to get some education, and then you're going to take action. One of those actions may be like to call me. One of those actions may be to call Prashant. One of those actions may be to set up time with another general partner or somebody else that you like and resonate with, and you're asking them how you can provide them value. What I did was I provided a general partner and principal value. He had already had a track record. He was already doing deals. He was here local. This is the partner that I've done 5 deals now with, and we're have another one going as well. And so I asked him, hey man, what can I do to provide value to you? How can I do that? And he was like, well, he knew that I wasn't going to bring him any deals. I couldn't raise any capital or do anything at that point. But I said, you know what, if there's anything I could do to help you, in my head, I'm like, well, what can I do? I can bring an investor to him. And so I brought him a couple of my friends that were asking me about my deals and how I invested. And I introduced them, and then they had a conversation. They met for lunch. I learned through the process, and I introduced them to more investors. And I did that before I was even thinking general partner principal. But when I look at it now, I provided him a lot of value because I introduced him to people that were going to invest in future deals. And so he viewed me as, man, you're providing me value. He then asked me, hey man, I see that you're taking a lot of education, you're doing a lot of knowledge, you're getting a lot of knowledge, going to the conferences, seminars, things like that. And then I kept helping him. He goes, well, why don't we start a meetup? You want to co-host a meetup with me? And I was like, dude, I'm in. So I definitely was not a teacher then. I'm a teacher now, but you just start kind of, pushing this stuff out there. And that was how I got my first invite as a general partner. And to go back to the deals. How the heck do we find them? I don't know. I didn't find them. The brokers gave him a deal, and I got an invite to the deal. Does that make sense?
Yeah.
Now, today, I finally have some deals under my belt, 4, 5, 6 deals. Now, when I talk to a couple of brokers, now I can tell them what I'm doing. And now they're like, hey, maybe we'll send you a deal in the future. What are you looking for? And taking down notes. And I'm like, okay, great. So that's on market. Off market, I have a couple of podcast interviews. One from Javier Hinojo, Hinojo, and somebody, if you really want to get after it and find some off-market properties, he's somebody that invested about $100,000, 15K for 6 months, and sent mailers, did cold calls, hired a team to go contact owners, go through like a CoStar list or Reonomy list or a city, whatever kind of list you get from tax assessors records, and go call them, go send them mailers, go, hit them with emails, whatever you have to do. And he found like, 100 unit something deal, and, his equity in it was like $2 million. So they're like, would you invest 100? What if somebody said, hey, if you give me 100K, I'll give you a 100 unit deal and you'll have $2 million equity. You should go do that. Now, I don't know if that's going to be guaranteed, but that's literally what happened to him. He bulldozed his way into his first deal, and he would probably say, yeah, I'll spend $100,000 every 6 months again. Would I recommend you doing that? Not unless you're going to create a system, a business, a process around it. It's not just him. He describes in that podcast interview, like he's got a company. He's got 4 or 5, 6 people. That's all they do. Acquisition manager, cold caller, marketing, CRM, he's got a system. But like, if you want to find off-market deals as a local individual, hey, I'm just a local guy. I'm not going to spend 15K a month, but man, you better do more of this networking, better get into the apartment, multifamily apartment association in your area, better go to the, REI meetups, go to the conferences, talk to some, maybe some owners, and find, the people that are tired of owning and, don't trust a broker. It's going to be very hard to find an off-market property. In single family, and you can find off-market properties by doing that mailer and kind of thing. But in multifamily, if it's like 30, 40, 50 units or higher, it's going to be very hard. It's a needle in the haystack to do it. Not impossible, but go check out that podcast interview. You can find a lot of data points on like how to go find off market properties.
That's wonderful, Abel. I mean, I know we are a little bit after the hour, 15 minutes after the hour, but it was a very good discussion. I think the most important thing is to me is to take action, do something, rather than just standing on the sideline, that if you're just waiting on the sideline, you're not going to go anywhere. I mean, this kind of resonates so well, just go help somebody for free for a couple of months, for God's sake, you will find your ways in, it's just a matter of a couple of months, why do you want to wait for years to get into a deal? Just help somebody for a couple of months and you'll find some ways somewhere. So having said that, guys, appreciate everybody's time. And once again, everybody's contact information is here. Abel's podcast, contact information, everything is here. My contact information is here with 7-day email course that I was talking about. Do me a favor, go to the chat window, do a control A. Control A, we select the whole chat window and do a control C, and then you can paste it wherever you want to paste it, rather than you have to copy it, write it down somewhere else. Control A, control C. You have everybody else's information, but this is 10:15 Eastern. Thank you very much, Abel. It was great talking. It was so warm, talking, and some good healthy tips, so to say, very warm and fuzzy tips, not too technical, the recording of this will come out and I'll send it to everybody. Anybody has any questions for future, feel free to reach out to me, feel free to reach out to Abel directly. It's an open format. Continue the good networking, and hopefully, we can do a deal together someday.
Yeah.
Right?
Yep.
Thank you.
Thank you so much, guys. Appreciate your time, and let's meet again in 2 weeks.
Thanks, everyone.
Good night, guys.
Good night.
Yes.
Very good, Lamb. John, folks. Very good
See you
to see
tomorrow.
Hey, Carlos, I've seen your face. I just never met you.
Yeah.
Nice to meet you finally.
Yeah. So, no, very good, guys. I mean, the bunch of folks,
John, Teresa.
Abel, I'll definitely be talking to you soon on LinkedIn for sure.
Yeah, man. Look forward to it.
All
Yeah.
right.
Take care,
Good
guys.
night.
Hi, Joanne.
Thank you.
good night,
John.
guys.
Bye-bye.
Yes, thank you. Good to see everybody's face,
Good night.
So,
Hi, Tony. See you later, brother. Nice to
Take
meet
care.
you guys.
I'll get in touch.
Sounds good.
yeah. Good night, Tony.
Good night.
Yep. And
Bye-bye.
John, bye now, Teresa. So yeah, good conversation, my friend. Thank you so much. Thank you so much for your time.
I'm glad I asked, I think at the beginning, right, is, hey, who's done a deal?
Yeah.
I had some like really a little bit more technical slides, and I go, let's
These
not use
are
those. Let's not use those.
Those could have been a little bit difficult for this group. This was perfect. I mean, the whole conversation was so perfect. Right on the money. So to say.
Right, brother.
Yeah.
Well, good.
No, very
Hey,
good.
hey,
Do you
okay.
share these slides? Do you share these slides?
I can send you the ones that I have.
Okay. Yeah. I think somebody was asking me privately whether I can get the slides. I said I will ask if
Okay.
just like Freddie, Fanny comparison, those kind of things. Those are pretty useful.
I'll send it to you. I'll
Yeah,
send you what I
very
have.
good.
And then
Yeah.
we're live on Facebook still. I think I see
Oh,
recording.
yeah. Okay.
Bye, guys.
Yeah. Bye, guys.